ABB, which is in focus. It's a very interesting stock because this word on the street was that probably this will be a stock that will be beaten down on the way margins have panned out. But I think it's the order book which is keeping the stock afloat, the stock at the day's highest levels with little gains of over 8% coming in there. In fact, a strong surge in order inflows is what they've seen in their fourth quarter, boosted by large wins. Let's get in the management. Joining us is Sanjeev Sharma, MD and country head at ABB India, and TK Sridhar, CFO at ABB India, joining in. Welcome to the show, gentlemen. Always a pleasure to speak to both of you. Sanjeev, let me begin with you. What has led to these large order wins in the fourth quarter? And are you expecting to see this kind of strong growth in the coming quarters as well?
Well, thanks for having us. We have had very strong last 5 years post-COVID, and especially in 2025 early quarters, we saw a slowdown in the marketplace, and I think that's what we shared with you as well at that time. In last quarter of 2025, we saw return of growth in multiple market segments. As you know, that we participate in 23 market segments with our 18 businesses. And this return of growth is robust across many segments. So namely, automotive, renewables, data centers, and certain core market segments like metals, cement, they all participated. And of course, there's a long tail of it. So we do see similar and more market segments joining that growth journey as we see the pipeline of projects and the customer expectation of spending building up in the coming quarters. But we will see through in 2026 where it takes us.
Got it. So, that's with regards to growth. Right now, you're talking about AI, data center. These are the buzzwords. How are these new growth areas going to contribute as well?
I think we have been talking to your channel for a number of years. And if you recall, and you go back, you see that a few years back, we said data center market is about $1 billion. But now if you talk about the size of that market has grown to $10 billion and expected to grow about 14-15% CAGR every year. So there's a robust growth in this market segment, and it will have multi-year legs to it. As far as we are concerned, there are two main components in data center. One is the computing power, another is the power that supports that computing power. So we participate in providing the assured power to data centers, which runs into very large volumes. And we are reputed globally to be the supplier of choice for large data center builds. And the same pattern is being followed in the country as the data centers being built across the geographies.
Okay. So moving on, Sridhar, let me come to you. The margins have recently operated at the lower end of the 12 to 15% target range. What specific operational efficiencies are being implemented to reach the upper bound in the coming quarters, and how do you plan to get it there?
I think if you look at, we were at 15% earlier, and now we are at 12%, as you rightly said. So I think that's a major player in this particular deviation is the material cost. We look at it, we were operating at 58% levels at that point of time, couple of years, and the last year as well. And this year we're at 61%. And the reasons for that is, I think, are very, very simple and three. The one, of course, the commodity pricing, with the commodity prices which have really strengthened. And number two is the forex volatility, wherein the foreign currencies have appreciated against the Indian currencies, which is because we are a net importer, we are definitely having an impact on account of that. And the last but not the least is about the mix of orders, what we are executing at this point of time. So I think these three factors, out of these three factors, probably two factors is not in our control, and that's something which we'll have to wait and watch as to how it plays out. But I think our efforts are definitely are actually a three-pronged. One, action to mitigate the risks which are known at this point of time, right? And to diversify our order profile and the revenue profile so that we are able to take advantage of the different markets, and of course also play on the mix of the products, projects, and the services element, push the services so that we are able to perform better on the margins. I think this is an action which is continuing every year, and with these focused initiatives, I think we should be able to maintain in the range of 12 to 15% is what we see.
Okay, so the range is something that you look to maintain as well. So with where we are, do you think is this is the bottom, and in the current situation will only change for the better with regards to margins?
So I think if the situation, we believe that the situation has changed for the better, because we believe that the competition intensity in the market should definitely improve, with more and more opportunities which could play out, because there should be an excess demand and then supply which should be able to meet it, right? And if that situation is going to prevail, so then we could have a margin accretion, because we have the leverage of volumes which will add to the current margin levels as what we see. But if the revenue levels are the same topics of growth as what we see, probably we will be able to maintain in the same corridor.
Okay. When it comes to order backlog conversion as well, with the record backlog that was been reported in the fourth quarter, what is the kind of timeline that you're looking at for converting these orders into revenue? And are you seeing any, say, supply chain constraints that are still hindering this kind of pace?
Okay, I will answer the second question of the first, because we don't see any supply chain constraints on the order backlogs what we have, and I think that's probably of the reason that we did a strategic step in 2025 to meet to the QCO requirements to stock enough, so that we are able to adjust to that particular risk which will play out. Number two is that our order book is today 10,000 crores. 70% of that is what are small orders or base orders is what we see, which will get executed over the next 4 quarters. And then the 30 to 45% will get executed over the next couple of years, as what we see, because they are large orders which have got an execution cycle locally.
Got it. The other aspect in terms of business is when it comes to the export outlook. What is that looking like? And in terms of localization levels as well, how are you seeing that pan out, Sanjeev?
We have 18 divisions. So in certain product lines, we have 100% localization. But wherever there are supply chains wherein the supply chain locally is not available, like say power electronics, that's where the imports take place. But the moment those supply chains get set up, our strategy is to continue to localize further. So that gives us a competitive advantage and also time advantage, and supports ABB's policy of local for local manufacturing. So we do see that's how we're going to play it out in future.
I think to answer your other question, Hiral, I think 10 to 12% of our revenues come from exports. We are primarily an organization which is focused on catering to the local demand, and local demand is growing faster. So I would say that we are well positioned in that journey.
Okay. My last question is, ABB is expecting the comparable revenue growth of what, 6 to 9% for full year 2026. Where does ABB India stand over here, Sanjeev?
Well, as far as ABB India is concerned, we have a robust backlog, which has a fast-moving conversion to the revenues, and also we have some long cycle orders sitting in our books. And as the market build-up is quite encouraging, and we see strength in the market, so our fast-moving industrial goods portfolio, which is 75% of our overall portfolio, we see the conversion rate will flow through the revenue. So we are quite positive to see similar kind of growth pattern we will see.
Okay, so similar growth to what the global is expecting. Thank you so much, Sridhar and Sanjeev, for joining in. It's always a pleasure to speak to both of you at NDTV Profit.